Hey guys, Dan here from Funded Trader Academy with my trade of the week. Let's break down this 20-point bearish trap setup from Tuesday, February 24th during the New York morning session on the S&P. So this setup was framed off of a fake move, taking out a couple key levels shortly after the open, trapping up some retail traders and reversing and rallying. We're going to look at this set up on from start to finish here and dial in the specifics using the Addis order flow footprint software to trigger this trade. So let's get into it. All right, before we dial in the specifics on the footprint, let's provide a little bit of broader market context using the volume profile. So if you go back a few days, you can see we're in a sideways market consisting of 4 days of balance, essentially just sweeping back and forth from range high to range low over and over again. So headed into the 24th, on the 23rd here, we were coming off a range-based sell-off from that 4-day balance range high down to the range lows, okay? The overnight session popped up just a little bit and tightened up just above that prior day low, that's 68.32. So heading into the day, I'm looking for one of two things to take place. I'm looking for price to test the overnight high or the low off the open and either fail or accept price, okay? Pretty simple analysis heading into the day. Okay, so with that as a backdrop, let's hone in on the footprint chart on the smaller time frames to really dig into price as the market opens and approaches those key levels off the opening bell. All right, so in the run up to that opening bell, this is your opening bell candle right here. This is 8:30 in the morning Central Standard Time. So in about the first hour and a half or so before that, right around, or I'm sorry, about the first half hour or so before that, you start to see price is on the descent, marching down towards the 68.50 level, one of our key levels that we're looking at. So just before the open, we notch just below it, and then here comes the opening bell surging volume. That comes in and pushes the market down hard. Okay, so let's expand this a little bit, and let's look at the actual footprint. Okay, we can actually see the executed orders. This candle right here, your opening candle, a pretty volatile candle. If you look at it from the perspective we're moving, we're traveling an awful lot of a distance here. We're starting off this candle very bullish. Price pops up. You see some block orders come in here, some opening positions being placed to buy. Up top here, and then that all gets flushed. Okay, but now when we look at this candle, the individual candle itself, we have some aggressive sellers down in here. This candle finished off as a positive 454 on the delta on a negative candle, so we have some price and delta divergence. The sellers were clearly in control here, yet we have more buying action and buying activity in this candle than we have selling. Okay, let's move to the next candle. Next candle is right here. More positive buying activity here. There's more aggressive buyers in this candle than there are sellers. Inside candle, and then another candle. All of this move, this entire move to the downside here, all had positive delta. So what does that tell me? When you have price going down and delta going up, that's a massive divergence. Okay, and we have that all throughout here. So this, as we push down below 68.50, is not built off of aggressive selling. This is built off of a potential fake move. Okay, so you're starting to see that develop here in real time. Okay, so now price comes down to the low point of our key zone, essentially, of what we're looking at, 68.50 to 68.32. Price comes down here, and we get one more final flush to the downside. Again, positive delta. Okay, as it comes down here and takes out this level, you have a couple of block orders here. So 342 executed on the ask and 204 executed on the ask. Okay, that's also passive selling going on to push this thing down just a little bit further. Okay, so now as price comes down here and we clip the 68.32 prior day low, what takes place? Well, we have inducement of more retail sellers to buy in or to sell off down here. They get trapped and price moves away and moves away quickly. We start to see some initiative action take place here at the top of this candle. We have a quad stack of imbalances here on the bullish side. showing the initiative action of the buyers taking off. And then you start to see this imbalance right here all gets eviscerated on the way back up. Okay. Now the delta on this particular candle didn't finish very impressive, but you can see the max exposure to the upside of aggressive buying behavior was positive 1,259. You can see that progression move all the way through on here, that the buyers were in control. We just needed to see price move in conjunction with that, and we got that. So if we look at this from a smaller perspective, or we zoom out a little bit, we failed a key level and we reclaimed it. Okay, so on the reclaim, as soon as we reclaim it and we break this node right here, my entry is on this close. Okay, this is my entry. I'm looking at this as the entry, and I'm looking for a value area retrace. I'm looking for that overnight value area retrace back up to the overnight high. This is my entry right here. Price takes off from that point. You can start to see delta build aggressively and move up. If we keep going up, my target is 68.71 or the 68.75. 68.71 was the conservative approach. This was just simply this swing high. Okay, so we had a trade from 68.51 to 71. It's a 20-point move. All built off of a fake move to the downside off the open, trapped up some traders, rotated back up, reclaimed a key level, failed, reclaimed, accelerated. That was the move. Okay, so let's recap this trade. We started off over here with the volume profile by framing our day and setting our key levels. We awaited the New York cash session to open for that surge of volume to see if those key levels can get tested. Okay, on those tests, once price arrived at our levels, we saw multiple failure signatures. The first being delta divergence on that opening move down, showing very weak move to the downside or potential fake move to the downside. Okay, we then saw some trapped retailers as soon as price took out that prior day low. Then finally, we saw the fake move down end and eviscerate all the way back up. Eviscerate this move down, which shows a shift in control from a fake move down to heavy aggressive buyers pushing this market back up. Okay, the trigger on this trade was a reclaim and close through of a previously failed key level. Okay, in this instance, the stop went 7 points below there in line with the ATR, and your target was the opposite side. You're looking for that overnight high or this potential swing high right through here as a more conservative target. And that move right there completes the auction of this failed breakdown and bearish trap.
Hey everyone, it's Dale here. I hope you enjoyed the video. If you like to trade alongside me and our team of prop firm funded traders every day, then click the link below the video and hop aboard. We are looking forward to trading with you.